Hello? In this video, I want to introduce a new position that I just opened on the SPY. It's approximately completed at this moment. The idea here is that Fitch downgraded the United States a bit last night, and we can see its impact on the SPY in the short term. I don't know how serious this decline will be, but there's been a significant intraday pullback. So I opened a calendar spread aiming to capitalize on the volatility skew. So we have a front-month implied volatility, IV, of 16, and a far-month IV of 12. I specifically chose this week's expiry, so the call calendar that expires in 2 days, with a positive delta. I opened this on the SPY, and the idea is that we might stop here, so the market doesn't overreact to this decline, and this can open up nicely even by tomorrow. Of course, if the decline continues, the total risk is the debit of this position. Here's the screenshot of the execution at 0.39. Essentially, I'm trying to utilize the high volatility skew here with a slightly positive delta, since we've fallen quite a bit. If we look at my SPX matrix, we've already fallen past this point, at these levels. The next logical level would be somewhere around 4,500, which corresponds to 450 on the SPY. If we go down to 450, there's a slight discrepancy between the SPX and the SPY, so let's say around 448, that could still generate profit. But if there's a pullback, say by tomorrow, we've seen ugly candles like that recently. Although that wasn't driven by news, it was more in relation to the FOMC, which led to a red candle the next day. So the key point is, if they pull it back slightly in the short term, and the volatility skew contracts, this could open up nicely. My expectation here isn't to make a 100% return. Even a 25, 30, 40, 50% would be ideal. So we'll see. I'll continue from here. Well, here we are again on the 4th, and the pullback I was expecting has arrived. It's a bit weak, but this SPY calendar position has appreciated somewhat. I would wait a little longer with this, hoping they might pull it back intraday, so I only closed half of it at 0.57. This way, the break-even range has expanded, and maybe we can squeeze a bit more out of it. Here's the screenshot. It was filled about half a minute ago. Practically, if we look at the SPX, we can see that we filled the gap classically, then they started pulling it back. Now the big question is, what the market will do compared to the intraday high and the level of the previous day. Will we break down from here and go lower? Or can we take it higher and possibly go to around 4,550? Or of course, there's usually a scenario where we come down to a double bottom here, then fight our way back up here, and the day is over. Well, that remains to be seen. So that's what happened with the position. It's obviously not risk-free because I didn't manage to sell it for double, but this way the break-even range has expanded, and perhaps I can get a bit more out of the other half. I'll continue from here. Well, here I am again. Some time has passed since the last closure, and the market has retested the level I thought we would revisit. From here, I have no idea whether it's going up or down. That's why I decided to close it out as it was roughly in the middle. The closing was successful at 0.67. Here's the screenshot from a few minutes ago. So practically the position has ended. It yielded more than the expected 25–30%, as I was able to achieve a bit more than a 50% profit with it. Together with the two closures, the profit is $92. Thanks for watching. Bye.